The message to my audience and to the Bitcoiners is just relax. You got to breathe, calm down, understand what you own, understand what we're living through right now. Let the stock market puke and figure itself out. And by the way, is it over? No. What are we living through right now? I'm literally on Wall Street having meetings with Wall Street people. This city is full of a bunch of over-levered, pompous hedge fund assholes. Going to be worth hundreds of thousands of dollars. I do, genuinely, in my heart, the left side of my chest, because they have to print so much money. If China, if Russia, if the Middle East, if these countries aren't buying our debt, someone else has to. That's the Federal Reserve. They're print. Powell came out at the FOMC meeting and said exactly that. He said, I'm slowing down QT. QE might be on the horizon because I got a job to do. And that is fund the U.S. government because Trump said China ain't funding it anymore.
Let's be honest. The financial system is barely holding together. The U.S. is buried in debt, and longtime buyers like China and Russia are backing off. So what's the Fed's solution? Crank up the money printers. Jerome Powell all but confirmed it at the last FOMC meeting. Quantitative tightening is slowing, and quantitative easing is quietly returning. The Fed's full-time job now? Printing cash to fund Washington, a move that never ends well. Jack Mallers, known for calling it like it is, suggests Bitcoin could skyrocket into the hundreds of thousands by year's end, but not without serious market turbulence. We're already seeing chaos, and there's more ahead before those price targets are even in sight. If no one wants to buy U.S. debt, the Fed's only option is to keep printing, devaluing the dollar in the process and turning it into near monopoly money. Mallers puts it bluntly, the disaster isn't coming, it's here. The powers that be just keep kicking the can. While traditional markets spiral, Bitcoin might be the last solid asset standing. The real question isn't whether there'll be a crash, it's when. Will you be prepared when it hits? Let's dive into clips from Mallers' explosive interview. Don't forget to like, subscribe, and turn on notifications for more deep dive content.
The reasons I personally believe Bitcoin will inevitably decouple from the stock market is because the stock market has been treated as this excess fiat liquidity monetized expression of currency debasement because it's where a lot of the global trade surplus has ended up. People don't want treasuries. They'd rather own Google stock. That's the truth. They would rather own forward earnings in Facebook, in Amazon, in Apple, and in Google than long duration US debt instruments. Is all of that makes sense? So if Donald Trump is going to say, I want to realign the economic order globally, he's going to crash the stock market and there's going to be a lot of disturbance in the treasury market. Now, how is this all good for Bitcoin? Okay, when Jerome Powell came out in March meeting for the Fed and said, I'm slowing down QT and I'm going to soon enact QE. And when Secretary Bessent of the Treasury said, we're looking into the SLR, which would allow banks to buy unlimited amounts of treasuries, what are these guys saying? They're saying if foreigners aren't the buyers of US treasuries and aren't giving our markets in America liquidity, we have to find it somewhere else. If China, if Russia, if these countries are not buying our debt and are not investing in our economy, who will? And when Trump is saying, Jerome Powell sucks, Jerome Powell sucks, Jerome Powell sucks, because Donald Trump needs Jerome Powell to enact quantitative easing to print money. The only way to solve the deficits is to print money. This is the massive aha moment that you have to realize is, listen, what Donald Trump wants to do is fix the deficits. He doesn't like that other countries are operating in a surplus and having jobs like manufacturing jobs, lower class jobs. They have a real middle class. None of these things the United States of America has. Secretary Bessent is getting out in the media and he's saying 90% of the stock market is owned by 10% of our population. We highly bias the upper class. You either own financial assets and you benefit from the currency debasement, or you don't and you get screwed. And Trump is saying my voting bloc Half my voting bloc has never owned a stock. They want manufacturing jobs. Half of them aren't college educated. Half this country doesn't go to university. And I need to reindustrialize this country. We have to produce stuff here. We have to defend against the fact that we're reliant on the outside world to actually live our lives. That's fine. All of that's fine. If you want to do that, whatever. You can agree with it. You can disagree with it. That's not what this podcast is about. What this podcast is about is, okay, if you're going to tell other countries no more surplus, take your money and go home, their money is in NVIDIA. Their money is in our debt. They're going to dump treasuries. They're going to sell our stock market. Who's going to buy it? Who's going to replace the bidder that was China, that was the Middle East, that was Russia, that was Europe? Who's going to replace that? And if you listen, it's the Federal Reserve and it's the U.S. banking system. The amount of money that they're going to have to print in order to make up for the realignment of global trade. And when the White House comes out and starts self-admitting that the US dollar positions us unfairly to operate in a deficit and have global trade. If you want to be the world reserve currency, you have to operate in a deficit. Your job is to give the rest of the world your currency and import debt and real stuff. So if you don't like that setup, then you don't want to be the world reserve currency. It's just plain and simple. So when people say we're moving towards a neutral reserve asset, things like gold are valuable. Things like Bitcoin are valuable. Why? It's obvious, because no one wants to be the world reserve currency. No one wants to operate into deficit. No one wants to deindustrialize. No one wants to eliminate their middle class. No one wants to disadvantage the poor. Nobody wants to over-financialize. Nobody wants any of these things. That's what Donald Trump is saying. But what we're living through, listen, short-term pain, short-term volatility, we've been saying it over and over and over and over again on this podcast. If you're caught off sides today, you haven't been listening. I'm telling you, volatility in the short term, it could go up, it could go down. The point is it's not going to stay flat. It's going to bounce around. It's going to try and scare you out. It's going to try and shake you out. You got to stay solvent. You got to live your life, make more than you're spending right now. Do not use leverage. Go outside, be productive, smile, hang out with your friends, just breathe, relax for a second. We cannot affect so much change without volatility. Okay. But why is the stock market crashing? Why are you seeing such violent reaction from tariffs? Because tariffs take away the surplus other countries have. Other countries take their profit from us when they trade and they dump it into the stock.
The stock market is hanging by a thread, teetering on the edge of collapse. Propped up by years of cheap money, tech stocks have soared while U.S. debt grows more fragile by the day. But this house of cards can't stand much longer. Trump's trade wars and Powell's relentless money printing are accelerating a breakdown. As foreign capital flees, the Fed will resort to printing even more, fueling chaos, crushing stocks, and leaving no safety net. Meanwhile, Bitcoin stands apart, unmanipulated, untouched by central banks, and built on hard-coded scarcity. As the dollar weakens and inflation spikes, the cracks in the old financial system are impossible to ignore. Tech stocks trading at 50x earnings? That fantasy is about to implode. Trump's economic stance is pushing nations to move their money elsewhere, while the Fed scrambles to pump liquidity into a sinking ship. Bitcoin doesn't need bailouts. It doesn't run on overvalued hype. It runs on scarcity and security. As Wall Street melts down and fiat currencies falter, Bitcoin is breaking away from the wreckage. Its decoupling isn't just likely, it's inevitable. Let's dive into more of the Jack Mallers interview to break it all down.
I think that Bitcoin will decouple from the stock market because, guys, things like DeepSeek, the reason things like DeepSeek are so scary is because it causes investors to think, wait, is everything made in the US actually that much better than the rest of the world? If so, why? Also, why am I paying 30, 40, 50 times earnings for NVIDIA? If Donald Trump is basically saying, China, Russia, Saudi Arabia, take your money, go home. You're not allowed to invest in the U.S. stock market. We're not going to give you a surplus in global trade and excess U.S. dollars to punt on stocks. Then why am I an investor? Why am I going to pay 40 times earnings for NVIDIA if I'm not basically buying the guarantee that everyone who's operating in a global trade surplus is going to be investing in the stocks here, right? It's like, oh, U.S. exceptionalism has just been funded by foreigners operating in a surplus. Does that make sense? So all of a sudden, if no one's going to be operating in a surplus and there's not a bunch of excess capital that's seeking a dollar denominated home, they do not want to invest in their local economy with local currency because it's going to strengthen the currency. So if I'm China, let me just give an example. I'm China, I'm trading with the US. I give the US a bunch of shit. iPhones and laptops and cases or whatever. Masks. I give US a bunch of stuff in trade and I get a bunch of dollars. If I exchange those dollars for local currency, I'm strengthening the currency, which weakens my export economy. I have to have a weak Chinese currency if I want to be the industrial power of the world. So what do I do with all these dollars? What foreign countries do with all the dollars is they buy our treasuries, they buy our stock market. They buy US stocks, they buy US debt. They need dollar denominated investments with these dollars. And so if the new policy is take your money, go home, get out of here. And by the way, when we trade, you're not going to get a surplus of dollars to invest. Well, what's that going to do to stocks? Go down. These countries are going to have to sell their stocks, sell their US debt. And they're not going to have a surplus to invest. So all of a sudden, I do not expect US stocks to be trading at 30, 40, 50 times earnings. Why would they? For those of you that believed it's because NVIDIA is that impressive of a company, they're not. It's because there's been that much fiat liquidity sloshing around. So I expect stocks to be repriced. If stocks don't have an infinite bid from foreign nation states, what multiple on earnings should you pay? It's a question for the free market, but not 50. I'll tell you that much. And this is why Bitcoin will decouple, because Bitcoin isn't priced on earnings. And if countries are looking for something to own, you're going to want scarce reserve assets. Long gold, long Bitcoin. Easy. So people don't understand what we're living through. And I'm looking on the internet and everyone's freaking out. And my message to my audience and to the Bitcoiners is just relax. You got to breathe. Calm down. Understand what you own. Understand what we're living through right now. Let the stock market puke and figure itself out. And by the way, is it over? No. What are we living through right now? I'm literally on Wall Street having meetings with Wall Street people. This city is full of a bunch of over-levered, pompous hedge fund assholes. These guys, the stock market's down like 4%. These guys are begging and pleading and screaming for a bailout. Give me a break. Everyone wants a relief rally. We're now at the phase where everyone's like, oh, you hear that? Oh my God, Trump said that he's open to negotiations. Trump said he might walk back what he said. And no one's actually pricing in the fact that Trump means business. Whether you like it or not, Trump wants to help the poor American. Trump wants to create factory jobs. Trump wants to produce stuff here. Trump wants to fix the deficit problem. That's until I see otherwise, Trump is about business. Trump is keeping his promises. Whether you like it or not, this is not a political podcast. I'm just calling it how I see it. And you've got a bunch of over-levered people here in New York that are just losing their mind. Listen, it is what it is. And this is so bullish for Bitcoin. They're going to have to print so much money. Bitcoin is really priced with how much fiat currency is sloshing around in the world. And in order for all of this to play out and work, we have to debase our currency. We have to devalue our debt, and we have to create more fiat. It's going to send Bitcoin nuclear. And this thing will not trade like a beta NASDAQ stock. It won't. Now, I'm not saying it's decoupling today. I'm not saying it's going to decouple tomorrow. All the people on Twitter like taking 15-minute candles and claiming Bitcoin's decoupling, it's just not how it's going to work. Right now, people are begging and pleading for a relief rally. They're like, oh my God, did you hear Trump just got on the phone to negotiate? Like, please, President Trump, bail us out, reverse all your policies. And then I don't think we felt enough pain. We haven't felt enough pain. These people need to learn. And Trump's been very open about it. He's like, I'm not looking at the stock market. Sometimes you need to take your medicine. That's what he said. If you are an over-levered, pompous hedge fund, bro, sometimes you need to take your medicine.
The crypto world erupted with excitement when Trump returned to the White House, branding him the first Bitcoin president. From appointing crypto-friendly regulators to proposing a national Bitcoin reserve, and even launching his own meme coin, it seemed like a bullish new era. But reality hit hard last week. After Trump's sweeping tariff announcement, Bitcoin plunged 10%, moving in lockstep with the stock market and reminding everyone that crypto still behaves like a risk asset. This volatility contradicts the idea of Bitcoin's decoupling. As Jack Mallers warned, that moment hasn't arrived yet. While Trump's policies may eventually weaken the dollar and strengthen the long-term Bitcoin case, short-term panic is driving the market. Investors continue to treat crypto like tech stocks, dumping it the moment uncertainty hits. Ironically, Trump's tariffs could accelerate the dollar crisis Mallers described, potentially forcing the Fed into more money printing. But markets aren't waiting around for that scenario to play out. One investor put it best: optimism is fading, and Trump's silence isn't helping. The key takeaway? Even a pro-crypto president can't override market psychology. So as we close out, are you betting on Bitcoin's eventual breakout or bracing for more pain ahead? Drop your thoughts in the comments, like and share the video, and don't forget to subscribe for more updates.